Good afternoon, welcome to GrainTV. My name is Cody Bills, this is Logan Burgess. Today is the 30th. It was an acreage and a stocks day, and of course it was much awaited. We had the market moving sharply lower in response to that, down 22 cents for corn, soybeans down 75 cents, and wheat in Chicago trading down 14.5 cents. Now, one of the big questions that we're going to be addressing here today is, now that new crop soybean contract has moved down 75 cents, what do farmers do, especially if you didn't have hedges on going into this report? Now, before we get to that, let's just set the stage here. Logan, what moved the market today?
Well, it was obviously the acreage number here, Cody. Exceptionally large acre release for soybeans here from the USDA. As you can see from this table here, the first column showing what traders expected. The middle column shows what the USDA reported today in terms of 2014 acreage. And as you can see, USDA projecting 84.84 million acres of soybeans planted. That was roughly 2.6 million acres above the average analyst guess coming into today's report. So absolutely massive number there relative to expectations. As a result, we saw a massive and very directional move from soybeans in today's trade. Corn and wheat, relatively different story there. Corn acres projected at 91.64 million acres, right in line with trade expectations. Not a lot to talk about there. Really just meeting expectations of the trade for today's report. Wheat, we did see a little bit larger acreage than what the trade was expecting by about 500,000 acres, but obviously, as we have highlighted here, soybeans the big story. That was the big mover. It seemed like corn and wheat were content following beans lower today. I think fundamentally soybeans had the really weak story that traders were looking at.
Absolutely, and let's take a look at where we got these acreage. Now, huge numbers, of course, across aggregate across the states, but where we saw huge improvements here is really the northern states. We saw North Dakota, we saw Nebraska, we saw Iowa, really all these, Minnesota, all adding significant amounts of acreage. North Dakota alone added over 1 million acres here to beans. So just giant gains here. And I think that what we saw is really a result of the fact that these are northern states. They're getting their crop into the ground later, and they were able to take advantage of that differentiation between prices. You know, we saw soybeans maintain a relatively strong price compared to corn here all during that planting session. And I know that we also saw some delays up in the northern parts, especially in North Dakota. Very wet planting season, allowing time for producers to switch over into beans. But of course, these weren't all just going from corn to beans. You know, I think this is a situation where maybe we saw some more acres come out into beans that weren't necessarily going to be planted here.
Yeah, absolutely. We'll have to see if that has an effect on yield at the end of the year. Obviously, with more subpar acres possibly added to soybeans, yield is something that we'll have to keep an eye on. But at the moment, no really concerns from the yield perspective. I mean, looking at production on aggregate, this is a sizable revision or a sizable addition to expected production here. And I mean, obviously, that was another reason why we saw futures trading lower here today. Cody, as you introduced at the beginning of the show here, we did have a sharp move lower here for soybeans. Just last week, we saw soybeans take another run at $12.50. Now we see soybeans trading at $11.50 to end the trade session today. As a producer who feels underpriced or underhedged coming into today's report, what can you offer? What would you be doing in this situation, kind of looking at where this market's at and in light of the numbers that we got today from the USDA?
Well, first of all, I think the big thing that you got to look at is timing, and I know that this is one of the hardest decisions you're going to make here, and especially after we saw soybeans come off here about 70 cents for that new crop contract. But the big question here is do you think that the market is going to go lower than where we're at today?
Right.
You know, that's the big thing. Of course, we have a huge amount of momentum to the downside. I would suspect that going into October, we're going to see lower prices here than $11.53. I think that if we get that kind of acreage, what that does, it adds about 198 million bushels to production on the balance sheet. Of course, we're going to count some of that in demand, but the bottom line here is we're going to have a lot more beans than we anticipated, and that is going to put a lot more pressure here on corn. So the big thing, are we going to go lower? I suspect that we probably will. I think you need to take out that mentality of day trading, because we could get, this could be an overreaction. You know, if we trade down again tomorrow and again for a third day, that could be an overreaction. We may get a snapback. But you know, it's very difficult to tell. If we get a snapback, will we snap back up to 11.53?
Yeah.
You know, it's hard to tell. I think you got to be aggressive, especially, and this is the third qualification, especially if you're profitable at these levels. If you're profitable at these levels and you suspect that soybeans are going to be going lower here, I think you need to pull the trigger. I personally would be pulling the trigger. I think the other question is, are you going to be doing it in the cash market or the futures market? There are advantages to doing it in the futures market over the cash. First of all, this is a very similar situation that we had in corn last year, where we have very tight stocks in old crop and you have a large supply coming online here during harvest. I think this is a situation where producers are not going to be eager to go out there and sell their beans off the combine to these elevators. I think there's going to be a carry opportunity from harvest into January, harvest into December. To capture that, I think what you're going to want to do is price in the futures market. Hedge in the futures market. Take your beans, go ahead and potentially store them. You might be able to capture that basis improvement here. I think it gives you more flexibility too, because you can find certain facilities that may come out of those basis lows during harvest a lot quicker. It gives you an opportunity to capture trucking opportunities as well. You got to do everything in your power here to market these efficiently, because with 75 cents just vanishing like that today, you know, you got to be efficient.
Yeah, absolutely. You know, same question can be posed here for the corn market as well. We saw significant weakness out of the corn market. As you can see here, we're looking at a December 14 daily chart, and as you can see, we broke through that key area of support around 1440. So technically, a very bad move to see here today for the corn market. But I guess in light of the fundamentals, I would expect corn to show relative strength here as we move through this week and really over the next several months. And I say that basically just based on the acreage that we saw. We did see an inline report today from the USDA relative to what traders were looking for. And if you look at this acreage figure relative to history, 91.7 million acres for corn isn't a sizable amount compared to what we've been used to seeing in the last several growing seasons. At the moment, growing conditions look very good, but we do know that we have a tendency to see a little bit of a premium put into this market as we move through July and into the key pollination phase. So I guess in light of the fundamentals that we got from today's report, I wouldn't be overly aggressive on pricing forward corn. And obviously, as you said, I'm in agreement with you, Cody, on soybeans. A very different story from what a soybean producer should be thinking about right now.
Absolutely. And you know, another thing here when you look at corn is you have the price of oil moving higher here. Ethanol has been really doing a great job producing. And you know, you look at the amount of the beans that corn that we found here in terms of quarterly grain stocks. According to our models and exports here, you know, we're running about 154 million bushels ahead of pace to meet USDA expectations. So all in all, you know, I think you know, there's less of a bullish scenario just because we've already come off here so much just in the last couple months. Soybeans, totally different story. But guys, thanks a lot for tuning in. If you have any questions about what we talked about here today, give us a call at 877-472-4607. If you want to be able to build these same sorts of charts that you saw on GrainTV, you can take a demo over at grainhedge.com. You can take a 14-day demo. We have a trading platform that you can use on your iPad, iPhone, Android, any mobile phone. You can be out in the fields monitoring your positions and monitoring the market. So thanks a lot for tuning in. We'll see you here tomorrow.